fair,
days,
mate,
to be fair.
you've got about 5 months to go before that's even like that is no longer a possibility.
Well,
Before you start considering a balcony jump.
that's a different type of BJ.
Nice.
Yeah, nice, great.
Is it rolling?
Hey, you're on a roll. No, but you are.
Is it rolling?
Yeah, he's is it on a roll? Nope.
We're going to have to clip that out.
Right.
Yeah.
Send me that one.
Are we good, yeah? Just do it.
Two of us are good.
Mic test. Dave.
Yeah.
Is mine good?
Hang on a minute.
Yes. Hello, sir.
Hello.
Hang on.
Cool. Okay, we're on. Dave, wait, let me put my coffee down. I'm alright to drink my coffee while we're doing it, aren't we?
Yeah, do it. It's fine. It's generally chilled. Right, guys.
Yeah.
Welcome back, everybody, to our third episode of Interoperable. Once again, I have Will
That's me.
and Pav.
That is I.
Throwback. Quite tired myself. I'm Dave. So we're now September the 1st,
Yeah, wow.
and obviously in Dubai, where we're all based, even though we're all from Leicester.
We are.
And obviously in the summer it's very hot, so we all went to Europe or did our own thing. We've all come back now, and we're now entering sort of business season, really, aren't we?
Hopefully.
Yeah, obviously all crypto, blockchain based,
Yep.
and it's exhibition season, conference season, meetup season, etc.
Which is important for you right now.
Oh God, yes, because we got funded. Thank you very much, Cardano community. You guys are legends.
Nice.
So yeah, very tired right now. I was up till 5 a.m. trying to get stuff sorted for it. So yeah, very busy. And
Congrats, by the way. That's a big deal.
News. Big news. What are the big events coming up?
So currently, there's actually a couple of events that we're doing first, which are not part of the proposal. We got funded for 6, but obviously these pavilions, because it's like 10 projects on each booth, and with exhibitions you get out what you put in. So you need typically like 3 to 4 months of prep work for this, for that size. So because the funding hasn't even come through yet, because because our treasury voting mechanism kind of got pushed back a bit. It should have all been paid out in sort of April. So I've had to sort of push 2 of the things back. So we're doing Tech for Impact in Tokyo beginning of October.
Yeah, I'll come to that. That'd be hard.
Yeah.
I'll actually come to that.
Yeah, and Dubai in October the 13th is going to be
What is it?
GitX Global.
Okay, yeah.
So it's actually Future Blockchain Summit. So this year it's 11 halls down at the harbour near the Palm.
Yeah, I remember that being busy last time.
Yeah.
Yep.
Hot as well.
Yeah. And then so that one's got your future. That's got your blockchain halls. It's got your sort of fintech financial regulators and tech startups. The North Star event.
I remember that actually.
But then at the World Trade Center.
The one in the harbour, isn't it?
Yeah. But then at the World Trade Center is another few halls with AI, Internet of Things.
That'd
There's
be
a
quite
dev.
cool.
There's a
Same
dev
day?
slam. Yeah, it's at the same events, but they're split over 2 locations
Okay,
because they've outgrown both.
Which one's your stand at, though? The harbour?
The harbour.
Yeah.
Yeah, it's a bit cooler there.
It's a flipping nightmare to get to
Yeah,
though.
it's-
Oh, yeah, it is.
And
to
then
be
when it's
fair.
like 50 degrees and
hot.
they've only got like one golf cart at a
Yeah, I was
time,
gonna
like
say.
taking you from the car park.
Yeah,
It's
I
not-
know. Well,
it's
next
not
year, you
enjoyable.
see that next year they're doing Expo City. So literally right next to
Yeah,
next
that's
to
what
me.
they- Why are they doing that anyway? That's what the whole.
Well, they can't do it this year. So the reason they can't do it this year is because another reason why I'm struggling to sleep. They're currently extending the exhibition halls
Oh, he hates
there.
it.
They've put in like an extra 8 halls in.
Nice.
Yeah, so that's October 13th, and I'm basically using this event that's coming up as a taster for a lot of the Cardano projects to say, look, guys, come see how the big boys play in the exhibition. Saying it's not a rare Evo. Nothing against rare Evo. It's great for what it is, but that's basically Cardano and a few other projects all meeting up. And
Yeah, I've never heard of it.
no, you wouldn't have. No. It's kind of like, it's even like a completely different animal to Token 2049.
Yeah.
You know, like Token 2049 is like the world's premier blockchain exhibition event, but this is like where you're going to find your IBMs, your Hewlett
You have a booth at
Packard.
Token on it.
There is another team, which is the foundation, another founding entity, Emergo, Intersect, and actually the Rare team, who are doing Token 2049 Singapore.
Can I ask you then? Well, it's a weird question. It's not exactly on the same line, but why are you so passionate about Cardano in the first place? Because you just like we talk a lot about even though it is in jest, like we do like slate it quite a lot. And what makes you passionate about Cardano generally?
It has a large, committed, passionate, and talented community that are at its foundation some very strong benefits for a UTXO based chain that still has it still has the ability to scale quite large. Whereas with Cardano, it's not just Cardano, there are others, but with Cardano, it's native assets and everything's on a localized state. So with Ethereum, it's like a global state. And this is why sometimes it's so expensive to send money and everything, because they've got to consider global state, the global ledger, when they're trying to move funds around and change that ledger. Whereas on Cardano, it's every UTXO is its own signature. So like even if somebody
how many are there? Are they all like?
There's billions, man.
Yeah,
there's billions. Like I'm in what I can't tell you off the top of my head, but in one wallet, I could have. It's basically the UTXO is what spits out. It's the unspent transaction from your previous transaction, but in one wallet, any one time, I could have like 50 or 100 UTXOs in there, and all of the assets are native assets, so they're not locked behind a smart contract. They just sat in a UTXO, which is waiting for a cryptographic key or wallet. So if somebody says, "Oh, I want to try and hack," I know we don't have it, but USDC on Cardano, how are they going to do that?
So what's the negative to having the structure that Cardano has, like over Ethereum?
Right. Okay. So we're in an attention economy, and because of the first mover advantage and the attention that ETH and EVM has had on it over the years,
I mean,
a lot of the talent is there.
Let's not talk about like marketing and attention. I mean, like on a structural level.
No, that's what I'm saying. No, bear with me.
Okay,
bear with me. No, because it matters. Because obviously, what happened with that attention, all of the the talents, a lot of blockchain talent developers and everything, are now assimilated into the EVM model.
So kind of like what's happening with Solana at the minute.
So kind of. I mean, Solana's a bit of a jump, but it's not as much of a jump. So Solana still uses native assets. It's using a Rust-based smart contract. I'm pretty sure they've probably got others as well. They've probably got like JavaScript and TypeScript and stuff. Cardano went a very much more sort of simple route to begin with, and then tried to build something different on top. So now it's kind of like, in a way, the difference is like people are used to Ethereum. It's only one jump to get to Solana and a few of the other protocols. It's like 3 jumps to get to Cardano. But now we've got smart contracts like Akin, like Helios. There's all these different ones coming out which are Rust based or TypeScript or JavaScript.
Are they equal in like what they can do to what ETH can do, like on the EVM smart contract?
Well, in terms of the software, it's the same. It doesn't matter what network you're on. When you're writing a smart contract, you're defining the terms of that contract.
But they have more or less capability, because I know that one of the issues with like the XRPL at the minute is that they are suggesting to put some sort of a smart contract capability into it, but it's much more simple version, from my understanding, than like some of the capabilities that you can have with like an Ethereum smart contract, for example. They're pretty much saying that like, because what they're suggesting to make some edits to the native chain, but then as well as that, they also then have the EVM side chain that's launched because of
the lack of functionality.
Basically.
From a functionality point of view, one of the reasons why so many hacks have happened on Ethereum is because it was such an expressive, what's it called, solidity. It's so expressive. There was functionality built in there that was easily exploitable.
Techie section.
Come on then, let's get into it, Pav.
Yeah,
So Pav, talk to us.
What do you want to hear?
everything. Welcome back to Dubai.
Yeah.
Hopes and dreams.
Hopes and dreams. The land of hopes and dreams.
The land of hopes and dreams.
Yeah, yeah.
So, what are you excited about at the moment for the next few months?
In what? In crypto?
Crypto and Dubai.
I think let's talk about crypto first because it was a question I was thinking about in the car because my answer to
the one that got you here early and you never told us.
Yeah, the one where I turned up early, you guys turned up late.
I was eating a muffin downstairs.
He was eating a muffin, he was having a coffee.
I had a coffee too, actually.
But like, I don't know, because like what is there? There's no like shiny product in the space right now. There's nothing to really, in my opinion anyway, to be excited about. Obviously there is, if you kind of dive deeper in each of your communities, you guys are very deep in your respective communities. Obviously with XRP, you've got different things like Flare, different developments with XRPL and stuff like Cardano as well. But like what is there to be excited about? There's no real like buzz in the space right now. There's nothing to like attract retail users in the space. Do you know what I mean?
No, I completely agree. And I was actually speaking to my girlfriend about this last night, and she's been semi-actively involved in crypto now for like a year and a half. And I actually asked her, like, what do you think of crypto Twitter? What do you think of crypto, this sort of thing? She said, crypto Twitter just seems to be a place where people go for engagement and you're not really given any real information.
Yeah.
And then I also asked her some questions. I asked her, like, in my opinion, it's quite a simple question for someone who's has been as active as she has recently. Can you tell me any differences between Bitcoin and ETH? And she just said, they're different networks. And I said, no, that is that is obviously the question. Like I've said, there's obviously a difference. You're just telling me that they're different networks. And I think that that's kind of sums up crypto generally at the minute. It's got way too focused on price action, and that's all that people talk about, and then they just regurgitate other people's opinions on price action. And that also then, I think that price action narrative is created from a macro space, pushed into crypto, which I think is relevant, but it isn't relevant to the broad goal of what we came to crypto for in the first place. Like, yeah, we all want to make some money, that's why we're here, otherwise it'd be a charity. I always say that to people. It's like, anyone who says they're not in crypto to make money is a liar, because otherwise you wouldn't have money in it. You could just sit on the sideline and talk about things and not be invested.
Yeah.
But the issue that I think we've got to in crypto is that people aren't relaying any sort of information anymore. It's just the only information that they relay is technical analysis, and most of the time, especially with the KOLs, it's not even their information to relay. They just relay what someone else has said.
Yeah.
So I think that's a big flaw.
Somebody been stealing your technical analysis again?
No, I just meant that generally, because she said, I said to her, like, what have you learned? She's like, what I've learned actually genuinely is that I don't want to spend much time on crypto Twitter, because everyone's like negative and you don't gain anything.
No one on crypto Twitter wants to be on there.
Actually 100% confident to say like our space being crypto is not really a good space to be in right now. I just personally I'm not as deeply as involved as you two, but even from like my kind of level is like I'm just not interested. I'm not interested to even jump on Twitter and see what people are saying anymore, because I know that like the state it's in right now, and there's just everyone's so focused on price action. We're in a weird point in the market, and I just see people bitching at each other like on crypto Twitter right now. No one's actually talking about fundamentals like use cases or any emerging like tech or anything like that's actually interesting. Do you know what I mean? Because question for both of you, what made you get into crypto in the first place?
Dave, you can start, but let me just quickly let me just say that on top of that point is that exactly there, plus the fact that even like I've been feeling like emotionally negative towards price action. I know I've only talked about, I know so that it's only talked about price action, but it's one of the things that I'm massively focused on. So Pavs interest and what he said about like learning on crypto Twitter plus price action making me feel negative is exactly the reason why I don't think we're anywhere near a top in the cycle. People even in the space are disinterested. And everyone who's been holding for years are like, they almost given up, like emotionally. So that makes me feel sentimentally, and that we're just nowhere near a top in the cycle.
And just to jump in there a little chill, guys, you'll be happy to know 2 days ago, I read your weekly.
No way.
Yes, Dave.
No way.
And you have
It's only my mum, which is kind of weird. Maybe we are at a top. My mum texted me saying, I just read your newsletter. And I was like, what do you think? She's like, going to try and read it more.
And I subscribed.
Thank you, Dave. Way. Nice, bro.
What did you think?
Didn't see you share it, though, prick.
Mate, baby steps.
True.
I'm sharing it on the podcast.
Oh.
Wow.
that all 12 people are going to watch.
The weekly insight.
The weekly insight. Substack, is it? We'll drop a link in the video below. You guys should have a read. It's obviously all technical and price driven. Everything that we've just moaned about the space being about,
and
but it's
macro,
good. But it's good, and a little bit of macro, a little bit of macro. But yeah, no, it's very, very good. I like it, guys. I know you both.
I think the question is, apart from price action, what was
my reason for coming into crypto? Right. So
how would you sell it to like a retail user?
Well, I was going to say actually, I don't really see in the Cardano Twitter. I kind of don't see much about price action. Obviously, if there's suddenly like a 5% drop or a 10% drop. Yeah, exactly. Because generally we never have like, obviously if it suddenly fucking moons, then I know about it because everyone's like, rocket emojis and shit. But most of what is discussed in Cardano, what you see on Cardano, is more about use cases, about like the supply chain RWA type stuff or the Iagon, and it's not always the good stuff either. Sometimes it's the bad stuff. Sometimes it's people calling out what they believe to be a rug pull or something scammy, but it's also quite a lot of we're at this event this week, or I'm at this particular conference and I'm going to be it's a lot more social activity based. And I was thinking earlier when you're saying about your missus, I was thinking I'd like to get her onto the Cardano community thing and just see if she notices any difference, because as an unbiased outsider, she's had time with Ethereum and Bitcoin, whatever you've shown her, but just say, right, here's a phone preloaded with Cardano accounts, so like on Twitter, so this is like a new account, there's no like Twitter echo chamber, here's one preloaded as a Cardano user one. Have a look at that and tell me if you see any difference.
Because I think it's just like I don't want to be like the guy who comes on here and just shits on things, because it's not my goal in the space. I'm here to try and bring people into the space, not say, oh, this is wrong, this is wrong, this is wrong. I think one of the problems at the minute is the main KOLs, who are the people who drive the most attention, literally statistically, are all mates, and they all echo the same thing, and they all take the same sponsors for projects. And that creates like a negative echo chamber. And most of the sponsors that they take are, we can call it out, call a spade what is a spade, are just liquidity drains. Like they promote a thing, they've got 1% of the supply, and with an invested contract that they're going to sell down on for the amount of engagement that they get essentially on the post. And everyone's in the exact same group. And that's one of my big issues with the space right now. I don't know how you get past that.
Yeah.
Unless you just get a new group of people who are just going to come in and be exit liquidity.
The only way you get past it is by, to a certain degree, regulating the space, or at least actually having actual repercussions for bad actors. It's become the Wild West because a lot of these people are doing what they're doing because they can't get away with it in the real world, but they can get away with it here. And it will happen time and time and time again. And the lines between what's right and wrong are very blurred here at times, and people will try and gaslight themselves into, being, this is okay for me to do this because. Do you know what I mean? Like there's a lot of false north stars as well, like barometers and compasses.
Yeah, and I think this segues pretty well into something really important that we've said we're going to talk about this week. It segues really well into one. I know you want to mention Zach XBT, who for a long time was a really bright shining light in the space. In my opinion, he was there for the right reasons, and then his morals, in my opinion, have got distorted. But also, there's been a massive distortion on the space in general, which includes Cardano and XRP. Which is where all of a sudden Cardano and XRP are generically being included with things that are such as, like I mentioned earlier, like liquidity pools, essentially, like the multi-level marketing schemes is like something that they've been called. And to be absolutely completely frank, guys, is in 20 years' time, we could sit here and look like twats, and we could be wrong. We could be wrong, but we're obviously...
Tried.
Yeah, we're in the space, but Bitcoin's exactly the same. ETH's exactly the same. Sol's exactly the same. They're all exactly the same in that sense. And this is what I discussed on Twitter. I said, look, if you're a Bitcoin miner, you do not make any money unless you sell your Bitcoin, and you need to sell your Bitcoins to pay for your energy bills and improve your mining facility, or you're going to lose out in the long term. If you're in ETH, the ETH Foundation sold down on their ETH supply, and they also conducted an ICO where they sold pretty much all the ETH they raised for $1 to people who, I don't actually know anyone who got in on the ETH ICO, and I've been in the space since 2017, and obviously was new in the space in 2017. Solana, multiple VC rounds, still releasing circulating supply now and selling down. So Cardano and XRP in those senses are they're not dissimilar to any of these projects, but the space is turning on both Cardano and XRP right now. I'm not sure of the reason for it.
Yeah, I was going to say, why? Because XRP has always been the scapegoat since I've been in the space.
Well, no, but it was for different reasons, wasn't it? But now you see, now that the legal case has closed on XRP...
What narrative did they jump on?
Yeah, they need
now?
a new narrative for it now.
Are they jumping on the narrative of Ripple dumping on retail? That seems to be the new spotlight.
I see somebody from Ethereum, like the community, Vitalik or the foundation has just sold 170 million.
Exactly.
It's like it happens every year. Because guess what, guys? People need money, and foundations need money. They need cash flow. So they and the reason we're given the funds in the first place was to do exactly that, to sell it. So when you see the whole thing, like you say, I saw it, and it's what was his name?
It's Chris Larson.
Yeah,
270 mil, which is 1% or 2% of his holdings.
2% of the supply, and it's this big number. Yeah, but if it was 2% of a market cap at 500 million, it wouldn't be anywhere near that.
Yeah.
I said, but ultimately, it's bullshit. And then obviously Zach reported on it, didn't he?
Yeah, but that's where he's gone wrong, because he was a scam catcher to start with, and then now he's just starting to get his personal opinion mixed in with what he used to do, and that isn't where he was valuable to the space. No one gives a shit about his personal opinion. He's a good forensic analyst. And that's it.
He built up his reputation and his following on basically helping to track down people who were scammed or hacked on ETH.
See what I'm trying to say now? Even you can see it with him. This is a great example of people pivoting away from what they actually came into the space for to now just try and get clicks and engagement. Do you know what I mean? You can see it. That's just a perfect example.
Yeah, because in no way, for his brand or the reason that he came into the space, it has nothing to do with his opinion.
No. It's that North Star thing again. The line.
Thinks he's like God or something.
It's like, I'd never help. These people are beyond help.
Yeah,
it's not just Zach though.
There's loads. Yeah,
loads. And there's loads of different users, but it's also you saw Litecoin's tweet as well.
Yeah, ridiculous.
That's worse, I think.
Did you see that Litecoin tweet? I was reading it I was out of breath. I was like, give me a full stop. Give me some. Just give me some grammar.
Someone just had a really bad day.
Someone was pissed.
Yeah, but then again, they then tweeted today saying something like, so the Litecoin tweet went along the lines of comparing XRP community to a comet, basically saying that they smell like shit or something. Essentially along those lines, and then today again they've tweeted, or 6 hours ago when I last looked on Twitter, it said, we actually at Litecoin take the piss out of a few different communities. We took the piss out of Solana a while ago and no one kicked up a fuss. Why is it when XRP is mentioned that everyone starts kicking up a fuss? And I was like, well, firstly, I don't remember taking the piss out of Solana, because I definitely would have tweeted on that, because that's jokes. But secondly, and more importantly, is the reason that XRP community really kick up a fuss and you get so much engagement is because everyone just shits on XRP.
I can guarantee you Litecoin shat on Solana when there was no community.
Bro,
it'll be like the $8 time, and well deserved. Not deserved. Right, I don't mean deserved. Right, expected.
Yeah,
it wasn't deserved even before there was a larger community like there is now on Solana. There was people that I were friends with on there that were doing really working just as hard as anyone on any chain I know, trying to give it some use case and not involved with all of that SBF bullshit that was going on. They weren't scammers, but at the same point, if Cardano went down to a cent tomorrow because Emergo did something shady,
just dumped everything.
Dumped everything or did something shady, and then
that doesn't make you a scammer. That's my point about Zach XBT's comments.
Oh, okay. So going back to Zach.
Sorry.
Yeah. Beyond, was it Beyond Health?
Yeah.
No, I mean, ultimately, I nearly said back, save to drafts was, and this won't make it on the poddy either, but my save to draft quote tweet was, oh, wow, even people that work for free can. Do you know what I mean?
Yeah. But going back to exactly what you were just saying about Solana.
Yeah.
Solana's had a proven issue / scam. Like, I'm not saying that Solana is a scam. What I'm saying is
time and time again, mate. Time and time again.
Yeah, let's use FTX as this perfect example. They had a huge amount of Solana supply. How they acquired that exactly, we don't know. Yeah, some of it was declared, and some of it, I don't know. Some reason we just looked in the treasury and there's just a shitload of Solana in there. But Zach XBT hasn't come out and said, oh, literally the biggest scam in crypto happened on Solana. But he's not said that they can't be helped. He's just said, actually, no, it's these guys that can't be helped. Yeah, these guys rallied from $8 to $200 in the bear market. Nothing fishy going on over there. FTX managed to accumulate like however much percent of the supply.
There is obviously we're going to be slightly biased, and we're not trying to sit here and be.
I'm very biased. I'm very biased.
Yeah, we are. But like, we're not trying to sit here and like play victim and say, oh, why yours, kind of pick on someone else. But like, it's just, I sit there and I'm really trying to think like, why is it always XRP holders? Like, I was literally getting my hair cut from a brand new barbers I've never been to before, and we got onto the topic of crypto, and he's like, yeah, I hold some Bitcoin, some ETH, some Cardano, I don't know why. And in my head I was thinking, he's surely going to say XRP, because a lot of retail users just managed to get their hands on XRP.
Was this in the UK?
No, in Dubai.
In Dubai.
And he's like, I didn't even prompt him to say anything about XRP. He didn't say anything. I didn't tell him that I hold some. He said, my friend told me not to buy XRP because it's shit. And like, the XRP holders like don't know what they're talking about. So, and he's not even in crypto. He's a barber in Dubai.
Yeah,
and
mate,
he has that opinion.
Your barber is Dubai's version of the taxi driver in the UK. When your taxi driver starts talking about, have you bought Squid Coin or whatever, that's when you dump it.
I'm going to play both sides of the fence on this discussion, because exactly what you were just saying is like, but the taxi driver always holds XRP in it. Like, you know, when you speak to someone in the UK, as you know.
Mate, Brits love XRP. Yeah, I didn't realise how many Brits had XRP.
Yeah, this is kind of my point with XRP price action as well. And then they say, oh, it's just a retail coin, whatever. And people play that as a negative. And I think that's actually a massive positive. It means that there's a vast amount, even if it's not massively financially, but there's a vast amount of wallets where there's distributed amounts of token that people probably aren't going to sell because they would have sold it already. Like, if they were going to sell it, it'd be sold. Yeah. What's most likely to happen is, as soon as we start to head into price discovery and positive momentum comes back towards the chain, those people who already know about the token, who look at their wallet and think, oh, actually, I'm up for the first time in 3 years, they do the opposite of what you probably should do, and they buy a little bit more.
Can I just say, right, I know there's a lot of negativity. XRP is feeling the heat at the moment, just like Cardano always does. Right, you're welcome to the club. Right, however, slightly different flavour that you're getting, but it's the same. It comes from the same place, right? However, there are some positive stuff out there. I saw Charles talk very positively about XRP yesterday in response to some negativity, I think. He's trying to build bridges with the community, I guess.
Yeah, I've seen that. And Chainlink. He talked about Chainlink yesterday.
Yeah, and Chainlink. Basically, there is positivity for XRP out there, but I feel like from the XRP accounts, it's almost like it's a reaction to the negativity. And my sort of outside looking in is other than you and a few other community members, the majority of these people that are popping up in my feed now only seem to pop up with positivity when you're getting battered. But they're not there the rest of the time. Now, I don't know whether that's just because at the moment all of those positive tweets are getting more likes and engagement, therefore it's now seeping into my feed. Maybe it's you reposting everything, and because I'm following you, I don't know. But I just feel like generally when you've backs against the wall in this situation, the XRP community comes out.
Yeah.
But the rest of the time, there's kind of like they're just sort of cruising and waiting for the people to post stuff rather than do it themselves.
Well, the cycle normally goes that like you get hate, people despair, for a bit they fight, and then within the community becomes infighting, and then the infighting stops and it goes silent, and then the price moves. That's what normally happens.
Okay, so XRP hate and narrative aside, like, what's your genuine thoughts on XRP, like in the short to medium terms, in terms of price action and where you see it kind of going?
Well, I think there's like a few catalysts for this. I'm going to talk about some like technical and some fundamental as well, because I think that's important with what's going on. And I think it relates to what's going on around the world right now. But to start with, I've had the argument this cycle that XRP has been leading price action. We discussed the SEC suit earlier. And one of the reasons for the potential lead is the fact that we're out of this lawsuit and the narrative is shifting from being like the singled out token that the US picked to basically shit on or make an example of, is now that narrative is ending. So price action obviously rallied last year from around 50 cents to 270 and then continued to 330, 340 towards the end of last year. Then consolidated for a long time. We've been in this consolidation period now for about 270 days, rallied recently in the last month to 360 and then has so far, like today I think it was about 270 when I woke up at the time of recording. And I think that we're ready for this next leg up, and I think we're ready for the next leg up in price. The market generally is ready for the next leg up. If you look at ETH, it's broken all-time highs for the first time this year. It broke it twice, like 2 weeks ago or last week, and then since then it's had about a 10-15% pullback. Bitcoin's also been setting new all-time highs and basically been trading in a range between 111,000 and 124,000. Bitcoin this morning was at like 107k, and people have started to call for the top. And these are the times when, in my opinion, you go higher, because market makers aren't going to shift people out of long positions, meaning push the price down if the top's in my opinion, especially when there's liquidity above us in short positions, which we can clearly see on the liquidity maps that we share.
Yeah.
So all of this roundabout discussion is to say that crypto on its own looks like it's ready for another leg higher. I mean, whether that comes weeks or months, I can't answer that question, but the structure of what we're doing in terms of sentiment and price action is shaking people out of positions to move the price higher.
Yeah.
So XRP moved from 270 to 360-ish or 250, maybe even went lower than that to 360, and then since then has retraced. So there's discussion on the structure of this, but I think it's about to move higher for a few reasons. So first off, we've got the introduction of XRP DeFi, potentially coming as early as the middle of this month, which includes Flare Networks, which we're going to get onto in a minute. I think that's going to bring at least some hype and narrative around XRP. We see the discussion of ETFs, which I think the decision has to be made in October for XRP ETF, but also Solana. But people will front run this if they think that the ETFs are going to be approved. And we've seen a lot of amendments to S1 filings in the last month or so for XRP and Solana, which was what we saw before the ETH and Bitcoin ETFs went live. If you look at CME futures trading, XRP has had the most volume, for early tokens, basically when they were launched on CME. So there's clearly demand there for XRP from an institutional level or from a business level. And I think the next leg, and if we look at liquidity, the next leg looks up towards 420 plus. I do think that people underestimate the amount of reinforced positive traction that XRP price gets when it starts to break out. And I think that the next leg probably takes us 6 plus, and I realistically think 8 to 11 is my personal target for the next leg. And people think that sounds ridiculous, but I also think that the whole of the crypto space moves up quite significantly with the introduction of what's the stablecoin, the Genius bill, and stablecoins are going to start to come into the space. If you start to reference people like Arthur Hayes, he thinks that we're going to see an influx of $10 trillion in stablecoins through the rest of this cycle or the rest of Trump's term, and we've got midterms next year, so it makes sense that at some point soon they're going to start making people bullish towards the markets in whatever way possible. And you see, talking about markets generally, we can see equities rallying to all-time highs. Even commodities starting to break out. Silver, gold's looking this week like it's getting ready to push again. Uranium is breaking out of a long-term consolidation pattern. So what I'm suggesting here, as well as seeing the monthly close yesterday, or at least on Friday for US markets, so they don't trade over the weekend, the Dow Jones closed monthly all-time high. The S&P closed monthly all-time high. The Russell 2000 closed above retracement levels, and that suggests statistically that it should break all-time highs. So everything's looking like it's ready for its next leg up, and if I'm right that XRP's led so far, it hopefully continues to lead. And the final little bit that I'll add to that is that XRP against Bitcoin has been consolidating for a while, has retested a key support level, and I think is ready to lift off as well. And XRP against ETH also has been holding weekly support that was previous Wyckoff accumulation range high. So I think from The lows, it rallied. I don't know the percentage, but significantly against ETH, obviously in November sort of time. And then since November, it's drawn down against ETH in terms of price action about 50%, but held the previous resistance as support.
Did you see? I thought I shared it in the group chat. I was trying to find it. There was a tweet that went out saying about somebody saying, everyone's calling bull markets up, right? But there's been 0 out of 30 bull market top indicators actually trigger.
Yeah, I saw that on CoinGlass is, I think it was 0 out of 100.
This is something I actually said in the newsletter. If you guys read it, this week I said in these periods of fear, I always make an addition on on-chain data to see what the risk indicators are saying. And it's something I'm going to write about this week. And I had a look at them, and none of them are touching anywhere near. They're not even close to a market top. So it's going to be an explosive event. But you touched on it a little bit there, and I definitely want to pick your brain on it because I think it's super interesting. And we're going to talk about DeFi on the XRPL. So, and we have to obviously cover Flare. What is Flare? How does it work? How does it affect XRP holders? And finally, why don't people like Flare?
Okay, so start with what is Flare? I'm not massively blessed in the fundamental space of crypto. I'm not like Dave. I don't understand the pros and cons of smart contract structures, this sort of thing. So I can give you a basic overview of what Flare Networks is. Flare Networks is like a chain which provides DeFi opportunities to tokens that don't yet have DeFi opportunities. That's when it was launched. The idea was to be able to provide DeFi for Bitcoin, Doge, XRP, Litecoin, and a few others. I'll get into quickly why people don't like it, and then I'll continue to say, because I think it makes sense as to the rest of the conversation. So first off, the first reason people don't like it is because they tried to airdrop tokens to XRP holders, and it was a bit of a failed airdrop. It wasn't completely failed, but there was miscommunication about how many tokens people would get, whether they would qualify if it was held in exchanges. At the time, exchanges like Coinbase didn't airdrop people tokens because they removed XRP for trading from their exchange. So it became a bit like this. People were like, oh, I've held all my XRP on Coinbase. Now Coinbase is delisting XRP. Where's my Flare? And Flare also had a canary network called Songbird, which is like a testing network for those who don't understand. And I never got my Songbird allocation. I think I did have some of my XRP on Coinbase at the time. Never got my Songbird. Coinbase kept all of that. And I think I got my Flare, but I actually think I did that via hardware.
But this isn't, I know where it's the community sentiment, but ultimately, as old as time, not your keys, not your crypto.
Yeah, of course.
It's nothing, Flare can't enforce Coinbase, who holds the keys to the crypto because you've not took it off the exchange, to do anything. And this is one of the problems with Midnight. Because Midnight has got a similar thing, but I'll leave that. Carry on about Flare.
Yeah, because I think though at the time it's people asked if they would get their crypto if they held it on an exchange, and then Flare pretty much confirmed that they would, and then all this happened with the SEC and obviously throws a spanner in the works. So that obviously sets them off on the back foot from day one. And then the secondary issue that they've had is they've not been great at. Until recently, they've got much better. They've not been great at committing to a deadline. Oh, we're going to do this. We're going to do this. This is the date that it's going to be launched, and then executing on that date. It's always been pushed back for a reason. This has happened, and even on the most recent date, which was for the introduction of F assets, which is the big one, what everyone's waiting for. They've even pushed that date back from middle of August to now middle of September, which obviously is now a week or two away, because the reason they gave is that they have more institutional demand than they originally planned, and they wanted to do one last audit, which they did a public bounty audit on the contract, which maybe with time will be a good thing, but for your view in the eye of the public is quite negative, especially when you've had these issues in the past.
Name me a more iconic duo. A blockchain company and missed deadlines.
Yeah, I know. And I actually know Hugo. I don't know him actually. I've met him twice. We've been for lunch.
So just for everyone, Hugo is the founder of...
Hugo Fillion's co-founder of Flare Networks. So we've been for lunch, and I've messaged him and I said to him, look, there's something wrong either in your marketing or communication. One of the two is wrong. And at first, I think he was a bit offended by what I said. He almost said like, oh, well, capacity to marketing, you can work with us if you want. And I was like, look, I don't want your money. I don't want to work with you. I'm just literally communicating from an outside perspective of like, and then he was much more receptive. And I said a few things that I changed. And to be fair, they've actually implemented pretty much everything that I said. I said, just make it easy for people to read that don't understand. Like, don't be releasing 20-page documents. People don't give a shit on the whole. People who do give a shit, give us that, but don't give us that on the whole. So going back to the original question, like, what am I thinking about Flare now? On a recent podcast, Hugo Fillion went on to the Paul Barron podcast, who's like quite a big XRP proponent, and basically said that by mid-2026, he thinks they can bring 5 billion XRP into Flare's ecosystem, which at the minute would be like ish 10% of the supply, or well, I think it was 60 billion circulating, but 100 billion altogether, which would be monumental because Flare's market cap right now is $1.5 billion. So if you bought, even at this price, if you bought 5 billion XRP on, that's 10x the market cap, $15 billion. And if XRP obviously increases, it'd be, say, I think it's going to go to 6 in the next few months. If I'm right with that, that's 20x the market cap. So I think there's a huge potential for price increase and price discovery for Flare networks should the utility execute. The risk is that delay, or the risk is that like bad execution, which is obviously priced into the upside price action. But what does Flare network do? Well, it allows somehow, again, I don't understand, it allows people to get native yield on their XRP without leaving the XRP ledger by some sort of like locking contract on the XRP ledger, and then taking a loan and or providing liquidity for liquidity pools. But the other interesting part about Flare networks is it's massively over collateralized on the loan, and they have like an agent that holds basically your Flare in an escrow, which means that a lot of the circulating supply gets locked up, which I think is another positive for people who are interested in price action, which is, as I said, what we're all here for realistically. So one last thing that Flare networks does that isn't utilized enough yet, and I think maybe will in the future, is it also has like it's also an oracle, so it does the same thing as Chainlink in a way, where it can provide data from real-world assets into the blockchain ecosystem. So they're the pros and cons to Flare. Needs to earn its respect back from the community. Obviously, a lot of people, including myself, if you look at it realistically and take the emotion aside, I have been buying anyway. But they've been distributing their tokens to people who hold Flare. It's been nothing more than you just wrap your Flare and delegate it, and you just get distributed Flare rewards every month for 25 months until the whole supply is circulating. Similar to XRP, similar to Cardano, similar to most ecosystems, it's like when price action is negative, people focus on the negative aspects of the chain essentially. But when price action is positive, all of a sudden everyone's like, what will come out when XRP's price starts going up? It's going to like overtake Swift, and it's going to whatever, like there's going to do this and this is going to be integrated into the US financial system, which, by the way, I would actually like to have a little chat about that.
Go for it. I mean, I'd like to hear from you, Pav, at some point.
Because I think Cardano is the same.
Well, Charles' tweet about saying that Brad was literally at the round table or something like that, Ripple are already in that circle kind of thing.
Yeah.
It's interesting.
Yeah, like, I think recently we saw the US government take a 10% stake of Intel. I think it was like last week or the week before. They said they didn't buy it because people were saying that like it's not free market, it's not capitalism to be buying stakes in companies.
It's nationalising.
Yeah. But then they said, we didn't buy it, we got given it because we offered like 11 billion of liquidity or 11 billion in contracts, and then people are kicking up about it. But then what the public have missed is that Joe Biden's administration gave Intel 9 billion in contracts for no return. So that's basically what Trump said. He's like, look, we went to them and they said they didn't actually need the money this time. And he said, well, what if you give us something in return? And they were like, well, about 10% supply. Essentially, that's the story, is what they think's happened. The point of this is, the reason I make this point, is because what we've seen is the US narrative say, we want to be the world leader in crypto. No one can deny that discussion. That's exactly what's coming out of the administration's mouth. And then we've got a group of different tokens that Trump literally named months ago, including Cardano, Solana, XRP. What else was there?
Ethereum,
ETH, and Bitcoin, but he said Bitcoin was separate, didn't he? Because he said one was going to be a strategic reserve and the other one was going to be this digital asset treasury or something.
We brought this up on the first poddy we did, and I'm sure there was another one that we missed at the time as well.
Yeah, there might be one more.
Anyway, it doesn't matter. Yeah.
But my point with that is, I don't think it takes a lot of imagination after watching Trump sign a deal with Intel and then the narrative coming out saying, look, we're not going to use taxpayer money to acquire these digital assets, for him to do some sort of deal with both Hoskinson, Brad Garlinghouse, Vitalik maybe, or Tolly from Seoul, and say, look, guys, and he even said this about Intel as well. He's like, look, I will keep making these deals every day for the US because we want their stock price to go up and we want them to be integrated into the US and we want to make America great again. So what imagination does it actually take when we know they've been in the same room together, especially with the Fed, and Ripple's been applying for a Fed master account and a US banking license for the US to go, somehow I want 10% of the escrow or 10% of Ripple's company share or 10% of whatever Cardano are doing, and then what we're going to do is we're going to give you this much trial volume to put through your network, or you can have this space and you can have this space, and we're going to work together to try and build the American financial system.
Yeah.
Do you know what? Just to jump in at that, because I was having this discussion with some Cardano community people the other day in DMs. They were like, there was a tweet about the government, was it CPI figures? They're going to be stored on
GDP.
GDP. It's going to be stored on
big mix.
Well, yeah, it's like Ethereum, Solana, Avalanche.
Yeah, it's loads of different ones.
It's like Polygon as well, I think.
Yeah, Arbitrum and stuff.
And they were like, but it's me. And then on the surface, and this is where like I kind of enjoy what I do. On the surface, a lot of the community's like, yeah, but it's meaningless. It means nothing. It's like, dude, it means everything. Because the government employees that are going to be responsible for integrating the stuff that matters in the future are now going to be embedded in those blockchains, protocols, the programming languages and everything. And then all of a sudden, when all of a sudden something juicy comes up, Cardano is going to go over and say, hey, why don't you jump on ours? And well, okay, what EVM? You EVM? No. Like, how do we do this then? And they're just, I can't be bothered. I've just spent the last 5 years integrating the GDP or whatever it was figures on the other chains. I'll just stick to that. Like, people don't understand that just because it sounds meaningless at the beginning, it's actually quite huge.
Yeah, but I also think it's like symbolic. It's like, look at where we were 5 years ago compared to where we are now.
Largely, yeah.
This moves me on to a point that I made on Twitter specifically recently. So FedNow has recently gone live in the US, which is like instant payments, like 24/7. And it's about around the like ISO 222. And like, I don't know anything on a fundamental level about that. I understand that it's new banking regulation. I understand that.
It's digital asset, like it's a standard. So that
banking standard.
It's a banking standard for digital assets.
Yeah, so a lot of people are saying, look, it's got nothing to do with specific digital tokens or assets, whatever. And I'll leave all that discussion to the side. But the point that I will draw, especially because we've talked about Sam Bankman-Fried going to Gary Gensler and what do you think he's talking about, is the first company that did like their, what's it called, like where you work with someone and you want to talk about, oh, this is what we did. Do you know what I mean?
Oh, testimonial.
Yeah, testimonial. Yeah. The first company that did a testimonial for the FedNow was Cross River Bank. They were talking about instant payment settlement and liquidity, and Cross River Bank were Ripple's first ever banking partner in 2014. That can't be a coincidence. That's all I'm saying. It's like, and even if that is a coincidence, do you not think at some point that the Fed have spoke to Cross River about like how payments and settlements have worked in the past?
We've had it where like blockchain foundations were approaching the SEC and regulators saying, we want to understand how we can do X. Even Coinbase, wasn't it? The exchanges. Yeah. And they were basically told, yeah, fuck off, we're going to send you a cease and desist, whatever it is. Like, but it was all that choke point 2.0 again. It was that bloody...
Dave, Ripple met with the SEC every week for 4 years before they got the like investigation letters. And they were going into the SEC, showing them everything they were doing. They were all like, fine. Then one day, boom, lawsuit.
Yeah, exactly. And this is why the whole thing's corrupt. Like, how are regulators supposed to be taken seriously if that's how they're going to act? Like, and this is the problem. Like, this is why I'm really bullish about this this current cycle is because all of that BS
It's gone.
is gone.
Yeah, and I'm going to add to that exact point. So the exact thing that we're saying is negative here is something that I also think is going to play into Ripple's hands this cycle, which is that Trump is going to recognize, because one thing that Trump really is pro-America. He's going to recognize that Ripple stayed when they could have left, and they had all this issue with the SEC, and now they basically created jobs in the US, still managed to expand and grow in that time, and stayed mainly in their headquarters in the US. So I think Trump's going to, it's more likely than not that Trump's going to say, do you know what, guys, thank you for being patriots. Here's something. Commit $10 billion and we'll integrate you into our national banking system or international settlements for a specific corridor of capital or whatever.
Yeah, exactly. Yeah,
I don't think that's a far-fetched thing to discuss, but if you did say that anywhere else, apart from in this room, everyone would be like, don't be fucking stupid, don't be an idiot. It's a multi-level marketing scheme. Everyone who's not in, what Robert Breedlove said this week, everyone who's not in Bitcoin is retarded.
Yeah.
Literally said that.
I sent you that as well. Like,
did you send me that?
Yeah. So we said, so everyone who's not in Bitcoin is retarded, but it was a bit more than that. But yeah, it was crazy. So, Pav, I want to hear some of you, mate. Some of what you've been up to, what you're excited about. I feel like we've not really had much of you in the last.
Yeah, come on, Pav. Talk to us about a few things. There's obviously some things going on in your personal life. I don't know if you're allowed to discuss them on here. Are you allowed to discuss what's going on? Or?
What Mantle or job stuff?
Yeah, both.
Yeah, I mean, well, so I think I can say whatever because it's. I don't think there's an issue with anything. So obviously I've been with Mantle for like almost 2 years, and then like essentially Bybit came in, and like they have completely taken over like leadership there, and they just basically cut loads of people from the team who were doing certain things, and they just said, okay, cool, don't need you, see in a bit.
Is it because they've got that all themselves already, do you think?
No.
They just don't want to do it?
They just, I don't know what the game plan is, if I'm honest with you. I've not really asked them too many questions because people are asking me, who's going to do this? What's going to happen with all this kind of stuff? And like, bearing in mind, I was a guy who, like, I'd like to say I was a glue in terms of like our ecosystem dApps and our team, our marketing team, our obviously BD, obviously bring them on board and maintain a decent relationship. But when it comes to like co-marketing kind of thing, like I was a guy who kind of joined us both together, and now we don't really have that person. So it leads me to think that they don't really care about the ecosystem. Otherwise, why would they cut off the ecosystem marketing specialist, right? It's because now there's no, like my Telegram chats right now they're dead. Like apart from like the high priority ones, which are like 2 or 3. Bearing in mind I'm in hundreds of chats with these guys. No one said a word. They're like atting each other like, what's going on with this? What's going on with this kind of thing? Nothing. But yet MNT's gone up in price because Bybit have essentially like given MNT holders X and Y benefits on their Bybit platform, which is what it is. Fair enough, like leveraging what they have to pump the price up. But the underlying thing is, and like I can say it because like I'm 7 my notice out there now, is I can see it is like they don't see a future for the actual like ecosystem chain itself, which is why I was prompting those questions earlier. Like, what do you guys see in the space? Because from the world I'm in and the world that I've kind of been working in for the past like 2 years, it's nothing. Like it was when I first started, when TVL was high and it was reaching all-time highs. We were bringing on new dApps who had new products, like yield farming strategies, just general exciting things that like even me, who's not really too bothered about DeFi, would throw my money into and just play around with this kind of thing. But since like the past, like I'd say like since the start of this year, there's been nothing. And I think that's just not like ETH or Mantle specifically. I think overall, like you've had shiny new things come into play, like Hyperliquid, and everyone's got hyped about. But at the end of the day, it's still a DEX. Do you know what I mean? Like, what else is there for us? What else is there not to be interested in now?
I can tell you how. Sorry, ego. And then when I finish this, I can tell you how I think price will go up. Sorry.
Of what?
Everything. But anyway, continue. Because I just want to say like the difference between like our issue's always been, me and you talk about this off podcast.
Yeah.
Is that all L2s, including Solana, I'm going to include Solana as an L2, even though it's not.
Yeah.
They do the same thing.
Yeah. Of course.
So you don't need them. and they all rely on fake stats and TVL, and TVL is just like bullshit, really, isn't it? So what do that differentiates them? Nothing. The only reason that one chain, one L2, whether that's, and I'm not shitting on anything specifically because I don't have specific knowledge on each one, so I could be wrong here, but generally speaking, the only reason that price goes higher on each one is because of a paid attention economy. Like they start to employ KOLs or give away some sort of massive yield that they can't sustain, and try and boost TVL, which then repeats that cycle. So if anything's an MLM, it's probably every L2.
Well, that's perfectly evident with, again, I'm not now just shitting on Mantle for the sake of shitting on Mantle, but that's completely evident in like what's been going on like behind the scenes. So like you stop all these campaigns that they've been piling their money into. Obviously they had a $4 billion treasury. It's still 3 point something. It's still hefty. They've still got a lot of money behind them. But essentially, if it wasn't for the treasury, like what would be going on the network? I think they're on like all-time highs of in-depth TVL were like almost 800 mil. Now it's like 200 mil, and it's just stayed flat. So it's just these people who have held it for so many amount of time and just have it locked into the ecosystem right now. So now that all these shiny campaigns have stopped, which they stopped doing at the end of 2024, everything just went downhill because like what else is there? What else is there on the chain?
So this is partly why I'm doing what I'm doing on Cardano, because it's a very similar issue, but it's not 100% the same.
Yeah,
it's not going to sustain a block producer. Is not going to be able to live off the revenue alone. And I know this has come up many times in the past, and this is one of the things where ETH, when gas fees went through the roof, like, oh, this is why ETH is now. But then now that gas is really cheap on ETH, and everyone's like, oh, we won't talk about it now, but we'll bring it back up again when gas fees go up and it becomes sustainable. The majority of the treasury income, the treasury top-ups each year, because there's a 20% tax on Cardano for transaction fees and everything that goes into the treasury. The treasury is 90% sustained by inflation, inflationary ADA that's automatically generated by the project, basically like how Bitcoin's generated. But obviously it's reducing every year because it has a fixed cap of 40 billion. Whereas obviously we're at like, I'm going to say 36. Okay. We're down to the last 10% basically. Yeah. I think the inflation rate is roughly 2% at the moment, or 2.5%. But we don't have that unlimited supply like Solana or whatever. There's some of the foundations with Bitcoin we've kept in Cardano because obviously that's what Charles wanted. He was a Bitcoin guy.
You're finding the solution to the question that I've always asked is what happens when the inflation stops?
Yeah, what happens when the inflation stops?
What incentivizes people to use the network, which then and if there's no one using the network, then why would people stay to validate blocks?
Yeah, and at the moment we've had this because obviously the biggest powers that be in the ecosystem, the shiny things that they've been able to actually push has been TVL. Look at the amount of money we've got our VCs to chuck in that's sat there as liquidity. Obviously stable coins are a requirement really for most people, but this is the other thing. The vast majority of the world, like what's the American population? 350 mil?
Yeah,
7 billion people in the world. Yeah. Do you think everyone in the world, and this is where I think also why Trump's getting into crypto, because he's trying to push USD, he's trying to get USD as the stable coin for 7 billion people in the world, rather than it being euros, GBP, yen,
this
whatever.
This is a fantastic topic, which is what I was just about to say to Pav.
Right, well, I've got a question then. What role are stable coins going to play in this next bull market?
We discussed a minute ago, like who was going to buy, whether there's like negative sentiment in the market, what's new and shiny. But I think stablecoins fit that role for everyone. I think they're going to be the purchaser and the booster for the crypto space generally. And I think people are massively underestimating what it means. And I'm going to lay out the whole framework for stablecoins here, from the Genius Act all the way through to increased TVL and what that means for the crypto space. So to start with, obviously, the Genius Act has been passed to basically allow banks to hold collateral and for stablecoins and be able to issue stablecoins. And within that, most stablecoin issuers back as collateral by treasuries. And I'm going to reference ATHs' article again here, which was called Buffalo Bill Besson, I think, or something along those lines, where he discusses that he thinks there is a market for between 10 and $24 trillion worth of stablecoins to come into the crypto space, because essentially the US, as Dave rightly said a second ago, want to push dollar hegemony around the world. So there's a few reasons why I think this is going to happen and what I think it's going to do to market cap of crypto. First off is the US need people to buy treasuries, first off. Second is they've got like an issue with the Fed at the minute, where the Jerome Powell's not exactly playing ball to what Trump wants, and they want to take control of like short end yield curve, and they want to start controlling that. And basically Hayes suggests in his article that if a stablecoin issuer will take whatever yield they can get on a stablecoin. So if he says, look, you can have a 2%, even if Fed funds is at 4.5%, the stablecoin issuer will take 2% because it's 2% free money, and it's good for everyone, meaning that Besant's got control of interest rate, meaning the stablecoin issuer makes 2%, meaning that the US get to keep all the collateral, so everyone's moving their money back to the US, but then the on-chain dollar or stablecoin can be utilized around the world. And as Dave said, to all these other countries, Hayes suggests it's going to be through the social media platforms. He thinks that people like Meta and WhatsApp will probably integrate a crypto wallet, and then people, for example, in the Philippines, the example that he gives, who's got like a click farm in the Philippines, will be able to pay or transfer US dollars using these social media apps, which are already so prevalent around the world. And then he said that the only big issue with that is that other governments around the world will be like, oh, fucking hell, like these guys are stopping our monetary system. And then they might try and sanction different social media networks. But then he says, like, Trump's already shown his hand that he's just going to tariff people who don't play ball, so they can't really do anything. So he thinks that's basically what's coming. And I agree. And I also have said for a long time, there's two massively huge benefits of stablecoins to the USA. Even if we take aside the dollar hegemony, one is that you get to keep the collateral in the US. So all the money pours back into the USA that is being traded currently, even in Nostro, Vostro accounts, whatever, being settled by banks outside the US. All of that flows back into the USA, and you get an on-chain digital copy of that collateral, which you can then trade. It's almost like
borderless as well.
Yeah, borderless.
So you've got a problem with America. America's had this moan for a while that obviously a lot of the dollars that around the world, obviously it's all siloed and it's all sat on databases in, say, the European Central Bank or whatever, and there's the inter-trading thing, and it's a delay, and and they can't control it because it's there. Whereas, like you say,
it's just sitting in a bank somewhere.
As a stable coin that they hold the keys to, they can control it all from America. They can control the monetary. Because I don't think he's bothered. It seems to me like he's not bothered actually about how the strength of the dollar against the other currencies, but he wants the influence of the dollar. And the best way to have the influence is to get it in people's wallets
and hold the collateral.
Because right. So this is where there's a difference. Everyone, like a stable coin which is backed by treasury or cash deposits is different to a synthetic stable coin like an IUSD or whatever. So
or Luna.
Yeah, I think he's going to be very specific about that. And I think it's going to have to be the US based entity or an office entity like a USDC or Ripple that issues the stable coin, and the stable coin has to be backed by treasury bills or cash in the bank.
Yeah.
In America.
Yeah, I agree.
It's the influence and the control.
Yeah, and I also think so that's one reason why the nation state of the US wants treasuries, wants stable coins, because of those reasons we discussed. But I also think there's a reason that we're overlooking that banks are all accepting it as well. And this gets a lot of pushback when I say this, but when you just take a step back and not think about regulations for a second, is $1 of stablecoin is $2. Like $1 is sitting as collateral to be redeemed in a US bank in this example, and the other dollar is on chain and allowed to be used for whatever it's used for on chain. I'm going to get to why this is bullish for crypto in a minute, but just to lay the foundation here. So they're going to hold all this collateral and be in charge of all the money. It's kind of like having gold in a gold vault and having paper to say that you own the gold. They still hold the gold, and that's still what the dollar will be doing, but there will be a dollar on chain and a dollar in collateral. And at some point, the banks, we might get 20 years down the line, and the banks are going to be like, oh, well, actually, I've got flipping $10 trillion worth of dollars just sitting in a bank, which is collateral for stablecoins, but should we loan against that as well? And I think that's what's going to happen at some point. So they're basically turning $1 into two, and then they'll probably leverage the dollars that are sitting there as collateral anyway.
Yeah, the M2 supply.
Yeah, in some form, maybe down the line. Because they can just be like, oh, look at our balance sheet, just like we do with TVL. Oh, look at our TVL, we've got 10 trillion and we don't use it. It's just sitting there. It's never been redeemed. So I think that will happen at some point. But then the other thing is, so that everything we've discussed is just basically legacy finance. But we all sit here in a room, and if we have like money in our bank account right now, like if it gets over a certain amount, I don't know what it might be for you guys, different for each person, but you probably start investing it into things. You might start like, say you only need like a few £1,000s or dollars of expenses a month or whatever, no matter really what lifestyle you live, and the rest of it is more or less in a savings account or in stocks and shares or whatever. And that's why I think that crypto is going to explode massively in prices, because I think that even people who are really defensive are going to want to yield. So they might want 1 or 2% off some of it, especially if it can be liquid.
Yeah.
They're going to want some yield. And also, what do you do with your money when it's just sitting in an account? If it's just sitting in dollars, you probably buy something. And if you buy something, what are you going to buy? Something in crypto, it has to be, because they're the only things you can buy with something on chain.
Well, you need the yield, because ultimately with inflation, cash is a liability. You have cash in the bank, it's costing you.
Yeah.
Because your interest rate that you're going to get on it hasn't been keeping up with inflation.
Exactly.
So I think what I would just say on that subject as well is like, this is what I was saying about the TVL thing, like the big, going back to earlier, the big chains, they've only had TVL to flash, but I've argued many times, like, it's not about how much capital you've managed to get somebody to park into a vehicle. Is it being capitalized? Is it being utilized in a way that isn't yield through farming, which is the whole Celsius fucking collapse, because there wasn't actually any value to what was being given or capitalized. There was no value being generated. And this is what I was going to say to you earlier, like where I was coming to with the treasury stuff. There's been so much focus, like especially with Mantle, it goes to show that at the beginning you have to inject capital into something to try and generate a yield, generate a value. And if you don't, that's when you're going to just dwindle. And when you do pull the plug on that incentive, if you haven't been successful, there'll be no value prop there to carry on generating that yield. Yeah, that's where we're at. I'm trying to create revenue.
Yeah, but my kind of my discussion on that is that's on TVL specifically, and this discussion that I'm trying to make on stablecoins. There's almost unlimited TVL that's going to start to come on chain, and that's across all the chains. And my point is that like, if we value everything in crypto against the dollar, which we basically do against like USDT, it used to be against Bitcoin, but even in that discussion, it still works to this extent. If you then increase the amount of supply of that dollar on chain, people are going to naturally distribute that supply into assets, like because they want to outperform the dollar, like we're talking about here. The more dollars you have on chain, the more, even if it's not a directly correlated percentage, the more people that will buy assets on chain, like crypto, Bitcoin, ETH, whatever, and that obviously drives price up, which then creates the attention economy, which makes money move from place to place. And my discussion here is, the US obviously continue to increase money supply, which everyone does, unless that starts to deflate at some point, which I doubt, because it's free money for the bank and also for the country right now. This money is going to keep flowing on chain, and the money that flows on chain is going to be used in one way or another, even if it's, like I say, to the most safe expression is 2% yield on maybe they buy on chain treasuries. That's the least they're going to do, and the most they're going to do is start to deploy it into the ecosystems, buying Bitcoin, buying ETH, buying Cardano, these sorts of things, especially if they have ties with the US government, which is the other thing I'm discussing. And it's why I think prices could go astronomically higher than people think this cycle, because at the minute, what have we got in stable coins? I don't know in the market. I don't know off the top of my head, but then people go to like market cap, so use a stable coin to buy an asset, and they're like, oh, $10 trillion would make, if you put $10 trillion extra into Bitcoin, it would make it 14 or 13 trillion. I don't think that's true, because it doesn't take into account the supply and demand dynamics. If you brought in an extra 10 trillion of a denominated asset to buy something that people don't want to sell, the price is going to increase exponentially to the 10 trillion. That's basically my point. It's like,
what I would chuck in as well as and it's something that I've been hoping for years, but it's a bit of a poison chalice. one of the biggest potential benefits for people, just general people in crypto, is regulatory arbitrage. So we're lucky as Brits, we can go and invest in Apple stocks or whatever, no problem. But in America, unless you've got over $1 million and you're a accredited investor, you have seen a lot of crypto where it's blatantly a security by the definition of an SEC. And I'm not just talking about the L1s, because the L1s, majority of those L1 tokens is actually about, it's the lifeblood of the network. It's a payment rail, right? I'm talking about, you see it on Twitter all the time, like people putting out there, join our Telegram group or whatever, I'm going to give you trade plates or whatever. But ultimately, it's you're investing in somebody doing the work for you for an expectation of a profit. And it's only when you physically give them money, like capital, for them to manage, that's where the security thing comes in. So if I paid you 500 quid to do something, you might end up giving me like 20 quid back because, you know, but I was never expecting to get a profit out of that. So for me, at the moment, there's that, because it's not just America, I'm pretty sure like China and places like that, as long as the regulators are kept at arm's length with some of that, or at least they give these digital assets or financial products a looser leash, there's going to be regulatory arbitrage for people out there to get their hands on synthetic Apple stocks.
Yeah.
Or
well,
do you know what I mean?
Supposed to be launching their whole on-chain stocks in like 3 days or something.
Yeah. So I think it's going to be huge, because obviously, to a certain degree, everybody wants that, because obviously if you've got like 10 million people that can suddenly now, that couldn't before, but can buy a synthetic Apple stock. So it really does potentially create. But this is the problem. The more of that happens, the more digital assets falls into the same pattern and timing of your traditional assets, because more intrinsically linked to them. I mean, it has been
for a business cycle, doesn't it?
And it has been for a while to a certain degree, because the same investors that have been pumping the price or investing in crypto are the ones that were also are investing in your other stocks, because they now have that money.
But I think that the thing that's really important here is that people are so scarred from other cycles and playing within the wrong understanding of what the parameters of crypto is right now. We're playing in the TVL of $3 trillion or $4 trillion. And we're about to get an influx of 10, and whether you take the supply and demand dynamics I've discussed into consideration or not is another matter. I think that supply and demand means that we're going to have a multiple on that 10 trillion in terms of price action. And so if Arthur Hayes is even anywhere close to the money, if we can get this regulation through, and if we can get these stablecoin issuers to start doing what we're discussing here, it's win-win for everybody. And that's why I think that we could see such a huge bull market here that people aren't expecting, because the US win because all the collateral comes to the US. As you say, synthetic stocks win. So the US win both in terms of banking and holding collateral. They win also because the stock market goes up. They win also because they get $2 for every one that's on. So they don't only have the collateral, they can also use the collateral that they've got, which they've issued on chain, which they will be the issuers of, to participate in whatever they want to participate in. And then they know they're going to make the upside from that. So then they already buy the asset, like the Bitcoin that they're then going to buy publicly. They already hold a shitload of Bitcoin, and then that Bitcoin goes up. It's just inflating a massive Ponzi. And Arthur Hayes says one thing in the article that really sticks in my head, and it's like, this is like a once in a generation type thing, because we are evolving, or at least like adding an extra arm to our financial system. If this cycle, if it can get through this cycle, and I don't know, like if we can get it in this cycle, one of the big risks that he says is, look, if like Trump's party get elected out by next cycle, they could just undo it, and they could literally go like, oh, he didn't do anything that he said, and like we could start to undo these things. But if we can get the capital in, we're going to see a bull market like we've never seen, probably then to a crash like we've never seen if he gets voted out.
Yeah, but if you can, by the time that happens in 4 years, get the majority of the population and lobbyists and commercial enterprises and decision makers to be like, no, we like this, then good. to the next administration to try and undo it.
Yeah,
they won't
that,
last 5 minutes.
That's also what he says as well. He's like, look, it probably would lead to a bear because they would try and undo it, but then they would realise that they need it. Because you've got to a point where everything's been so inflated and you pump so much money into the system that if they start unravelling that, everyone's going to be like, what the fuck are you doing?
Even outside of the inflation thing, it's just like you'd become the scapegoat if you tried to unravel it. If loads of people were doing well out of it, and if everybody were getting access to things that they didn't before, if you come in, like once you've embedded something, it's very hard to, and if it's a good thing, it's very hard to
well, good's a bit of a loose term, but in this sense.
Yeah.
But that's kind of what I think is going to happen. Like, anyway, it's like, I think this part of the market is almost highlighting that something like that is coming because we're at all-time highs and everyone's, like we said, everyone's bearish. There's nothing to look forward to.
Speak for yourself. We're still 70% down, mate.
Yeah, I know, but I mean, like, market in general. Like, everyone's bearish. There's nothing to look forward to. Everything's boring, but prices are all-time high. Prices are all-time high, but people are starting to sell their portfolio. They're saying, great, thank you very much. I've had someone say, look, I made 400%. I've sold everything. I'm happy. I was like, I think that's that. I quite retweeted him. I didn't say it was wrong, but I said, this encapsulates sentiment at the minute. It's like, you're bored of price action right now. You have made some money, and that's fantastic. But what is he going to do if I'm even close to being right with the thesis along the lines of what Arthur Hayes says and my thesis about stable coins? If I'm close to being right there, then we're going to see like a 10, 20x from here.
With everything that's going on, I think that it's going to be like, do you remember the last bull? It was kind of like short-lived in the scheme of things, and it was early. It was because of the whole COVID
Stimulus package,
stimmy checks, but also we had that COVID dip,
that's what I talked
trench.
about. Yeah.
Last bull market was actually a bit of an outlier.
Yeah,
like there was so many huge global factors and macro conditions, like an initial action and then a big reaction, that like liquidity in the markets and sentiment to assets as a whole did affect all of that. I think this time is going to be, say, more prolonged, and I mean, people are talking about it being explosive. If it's going to be explosive, it's just purely down to market makers' decisions on to make it explosive.
But I also think that Jordi Visser has been quite vocal recently. He's become like in the limelight quite a lot, and he discusses something that I hadn't really just like considered before, which is supply demand dynamic, in the sense of Bitcoin specifically, talking about miners that they forward sell what they think they're going to get for options, and at some point he thinks that if the demand increases to a certain amount, there's going to be a supply shock and it will squeeze the price to the upside, because the miners will at some point be like, shit, we can't produce what we've said, we've forward sold too much, and we're going to have to buy off the market, and then that's going to squeeze price.
Did I share with you guys that tweet I saw last night where basically institutions are currently buying more than the daily issuance of Bitcoin plus the amount that retail are actually selling? Like it's something like 1,400 Bitcoin, and just institutions alone are gobbling up the whole current supply.
Which is exactly my point about like regulation coming in. So you take the regulation that people, like I'm saying here, is we're going to have this, if I'm right, let's just say that I'm right so I don't have to keep saying that, but if I'm right, you have the 10 trillion that say is going to come in, but everyone else understands the same game that I've already explained because they've made the bloody rules. So if you make the rules to this game that you understand, what's your first step? Well, you do the same as what we're all doing. You go out and buy all the bloody assets that you know the money's going to go into, and then they're going to go up. So you win on both sides of the trade. You win because you got the collateral, and you win because you bought the asset that the collateral is going to pump up in value. And that's what I think the institutions are doing now, why everyone's depressed.
Well, it's quite funny because I saw somebody on Twitter a while ago saying market makers are manipulating the market, right? And then someone said, that's not how market makers work. And they gave you the purest definition of what a market maker is. And my response was, dude, this is crypto. Every man and his fucking dog, if they have capital, they're trying to manipulate the price to their way.
100%.
And market maker, and this is why there was this big thing about Binance also having it being, not Binance, FTX also being its own market maker, because there's supposed to be, for obvious reasons, a clear separation between an exchange and a market maker. And FTX is basically doing both. Yeah.
But that's also in like that same discussion is what I've tried to highlight on Twitter about the recent dump that happened like last Sunday, where everyone was like saying, oh, someone dumped like 4,000 Bitcoin. And I said, anyone who's accumulated 4,000 Bitcoin, whether it's historically because they were smart enough to get in early, or whether they've had enough capital to accumulate 4,000 Bitcoin, knows one of two things. One, that the market is most illiquid on a Sunday, so that whatever they try and sell is going to influence
the
price.
biggest impact, yeah.
And two, that there's a million OTC brokers that are going to give them a much better spread than what they're going to get if they dump it on the market. Yeah. So they definitely know. And the third thing is, and no one and it moved the price by 3%. No one wants to take a 3% loss on 4,000 Bitcoin. So there's no other explanation for that move than that they literally deliberately did that to move the price down.
Yeah.
Because why else would you take a 3% loss on 4,000 Bitcoin? You would never ever do that. But they deliberately moved the price down. That's my point.
Yeah.
It's like they didn't deliberately take a loss on the Bitcoin. There's obviously an ulterior motive that they wanted to liquidate a specific person. They're working with an exchange. They're a market maker. Like any of these sorts of things, I don't know what the answer is, but what my point was is that there's no way that someone of that caliber or wealth or historical understanding of crypto does not understand that they're going to lose 3% of their capital just by selling it in one clip on a Sunday.
Yeah, one clip in it.
Yeah, so everyone who was out there panicking saying like, oh, people are dumping, it's like, yeah, someone's dumping, but for a reason that you don't understand. And that we can speculate on like, maybe liquidating a specific trader, or like you said, that maybe they've got other trades on, maybe they're short 100x on something else, and they spot sell, or maybe they know that like there's $2 billion worth of contracts that will expire or be pushed out of positions if they move the price down 3%. And when can we do that? Cool, on a Sunday, no one's paying attention. Bang, let's blitz it now and make a lot of money.
And the only people out there that could actually shift the volume to correct it. On the way back from Switzerland holiday.
Yeah.
Do you know what I mean? Like Sunday travelling back, ready for Monday morning.
Yeah,
like,
literally.
It absolutely ridiculous. But this is the Wild West, isn't it? There's like you said, there's a reason for it, and it was the one that worked for them.
So, Pav, what do you think about what we've just talked about?
Don't know. Don't know.
Well,
fucking tired.
So,
I was sleeping.
Literally.
I was just bored, Pav. I was bored, Pav, to sleep. I was like, fucking hell, we're still here.
Yeah, I was like, Dave signed up for another hour of this. It's 25 past already. So, Pav, about yourself, what are your thoughts at the moment in terms of where you see crypto going?
Where do I see crypto going?
Yeah, in the short term. Like, not price-wise, but in terms of developments, excitement, what kind of change, now that you're not so heavily tied to Mantle on a day-to-day, or you soon won't be, what are you thinking in your head you're going to look into, or what kind of excites you?
I don't know, because obviously I've got XRP, so I think a lot of the attention will go into what I can do with it whilst I'm holding it, obviously. Makes sense, so diving into like the XRP DeFi ecosystem, Flare, what's going on with there is probably, because that's how everyone looks at it. What can they do to make money in the space, right? And that's, for me, that's probably the only kind of thing that would be interesting at any sort. But this is what I mean. Like, there is no other thing. Like, I don't know if that's just me losing interest in crypto in general, or whatever. That's what like Mantle's done to me, or whatever it is. But there is nothing that I think, oh, you know what, that's pretty cool. Do you know what I mean? Or like, there's not like an ecosystem which I'm like, oh, that's cool, I'm gonna read more into there.
Yeah.
So the answer to that is nothing. Like, I don't really have an answer to why that is, or don't know.
What's changed between that and when you first got into the space?
Because I think when I first got into the space, there's, like I said, there's all these new products, everything's so new, like excitement. The blockchain, excitement, DeFi, it's all cool. You bridge to here, you do this, you do that, and then once that novelty kind of wears off, and there aren't really many incentives flying around in terms of like within like the DeFi space, because no one's really pumping their own like money into it right now. And right now, people are just trading assets.
I think the problem is the failure rate's been so high.
What do you mean?
Personally, like the failure rate. So the excitement was all about, okay, there's all these cool things, all these cool projects, all getting a bit of money to do X, Y, and Z. But the ones that have actually delivered in the last 4 years is relatively small. Like really,
it's really small.
Really, really small. Like I think that wears you down. Especially that's what's happened. That's what Cardano's mostly been focused on. It's not been about the price of ADA. It's not really been about the price of other things. We moan a lot about gamed metrics and stuff that we see elsewhere, and why are people putting so much emphasis on these things, and we all know why. It's because that's what they can show. Their shiny key set has these things on them. But I think the failure rate does weigh you down, and a lot of it is because it's quite funny though, because Charles has said in the past on stage with Ryan Selkis, stupid idiot, just full blown idiot. He said, the problem is that with these blockchains, everybody gets paid up front.
Going back to you, Pav, like, I think it's interesting what you're saying there, because I've felt similar recently. Yeah. Like in terms of like being inspired by the space.
Yeah.
And that's something that I really obviously take into consideration when I look at markets and stuff, like sentiment. But my personal sentiment, your personal sentiment, and Dave's probably being in the space every day, if we're people like this who a massive part of our life, if not the main part of our life, is in crypto, imagine what everyone's feeling.
Yeah,
and that's kind of why I've been making that point about people saying about the tops in, because everyone's sitting there, they must be feeling at least as bad as me, if not worse, especially if they don't spend as much time in the space as what we spend. So as much as price gets manipulated, sentiment gets manipulated too, all of a sudden there'll be one catalyst or two catalysts, price will go up and everyone's going to be buzzing again. Yeah. But what those catalysts are now is difficult to see. But that's why I've talked about stable coins, because I think it's just going to be, price is going to be the catalyst that gets everyone interested.
Do you think like apps and protocols are waiting for a catalyst within the market to throw some of their money into launch like campaigns or bring out new products that they're working on or everything like that? Or
I think it's difficult because I think the majority of protocols wait for price to increase before they release their updates. But one of the updates that could be an update could create the catalyst, or a catalyst could create the because if you go back to my point, it's because I think the institutions are just trying to buy. Like now we've got the legislation in place and they know that this money is going to come in. You don't want to be telling everyone, oh, it's time to buy, or like it's all-time high, because they're not ready to distribute on people yet.
True. No, because exactly. So what does that tell you? They're buying now at these all-time highs.
It's going to go fucking higher. And that's my point to everyone. So I keep saying on social media, I can't prove that it's going to, and if you look back through historical data, you can't say like, oh, it's definitely going to go here.
I'm not saying it's going to actually work, but I reckon what's going to happen is that the institutions are doing what they're doing. In the next couple of months, Bitcoin, at some point, gets to 150. Because it's a round figure. Then all of a sudden it gets to 150, and then all of the news channels start doing it. It's the same pattern as before. They push it up to 180, 200. That's why I think it does go higher.
Well, I think whenever you see it in the news again, and like you start hearing about loads of people talking about it, that's when you'll know when.
Around Thanksgiving as well, just before Thanksgiving.
Well, Will's got a thesis about like the World Cup and how Trump wants to like the markets and everything to be booming when the World Cup's in America. Everyone's there feeling good. It makes sense as well.
Algorand, do you remember when they had the World Cup tie-in?
Yeah, I bought some of those things as well.
Yeah.
Like their memories or whatever they are.
I tell you what, it's a shame because they're going to be left behind this time. But you'd have thought that their relationship with FIFA, they'd be saying, right, we want to...
They've moved chains.
Yeah.
The FIFA things move chains.
Yeah.
Like I had some on Algorand, and I don't know whether, I can't even remember what wallet I bought them in, or like a few $100s worth, but they've moved chains. They've done a deal with someone else now. I don't know who it is. But I said to Pav, like, I think the thesis is going to be, I think the market's going to be booming when all the eyes are on the US, like next year in the summer. I don't think Trump's a showman, isn't it? Like, people are going to be, they said $30 billion worth is like what they think they'll make from the World Cup. Trump was on stage with like Chelsea when they won the Club World Cup. He was literally there lifting the trophy with the team, and everyone was like looking at him like, why are you here? But Trump's a showman, and he wants to be looking good in the face of the world. So what's going to happen is he's cleaning the streets of Chicago right now. He's cleaning the streets of Washington right now. It's going to get to the summer next year, and the US is going to be like the most desirable place to live as much as he can make it that. And it's going to be, the stock market's going to be booming, crypto is going to be booming. Crypto is probably going to be everywhere, and the US is going to look fantastic on a world stage. That's my personal opinion.
So I was talking on group chat last night, and because obviously this whole pavilion thing, I'm trying to push these B2B solutions providers, right, to come to Dubai for this event.
And BB.
Yeah, BB. I was saying to them, like, where I think in its current form, Solana is going to struggle is they've been pushing this everything on the main chain narrative. I strongly believe that whether it be ETH2 or Cardano partner chain, there is going to be much more medium to large enterprise adoption if they can white label package their own chain with their own bespoke parameters relatively quickly and easily. So, for example, did you see that USDT chain that's just launched?
I think so.
Yeah, so it's not USDT specifically, but it's a chain that's been set up specifically for USDT stablecoins. So the parameters, like the block speed, finality, the validator consensus mechanisms, it's all bespoke. So for them, now what I've been saying to the guys in Cardano is we've got Midgard coming out later this year. It might iconic duo. It's been pushed back to Q1 2026.
Yeah.
However, it is effectively, although the Midgard platform itself will be the first, the way that it's being designed is for quick and easy, bespoke partner chains for Cardano main chain. So it removes a lot of the bullshit that you need if you're trying to set up your own chain from scratch. But it gives you basically, or a company or a group of companies, the ability to very quickly set up something that they can control themselves and use themselves. Because ultimately, not everything in the world that would be suitable for blockchain, like supply chains, right?
Yeah.
I don't need 1,000 validators validating who's got what component for an engine, right? I don't need that. What I want to see is the power of blockchain isn't just the tech, it's the community side. If I've got 300 approved suppliers that are building parts of my engine, each one of them will have to have a node, and it will be relatively small cost to them. They keep on it all the time, and they all do consensus, and they work together, and everything gets put on that way, and it's a closed thing. It doesn't need to involve Pav and his validator, but when that consensus is reached, it's pushed up onto the main chain, and then that's security because the rest of the world will zero knowledge confirm is where the value comes from for being a partner chain. That and the bespoke setup.
It's kind of like there was an amendment made to the XRP ledger about a year ago, which enabled clawback, but not on XRP itself, on tokens issued on the ledger. And that same discussion applies to that, because at the minute, no tokens are really issued on the XRPL. Why do you need to? There's not why do you need to. The why do you need to is exactly what you've discussed there. But there isn't the demand for it. So why do you need the clawback? Because no one is using the ledger in that sense. But as soon as you're starting to get other offshoot ledgers, there might be reason to need the clawbacks. But there's no point having the amendment unless there is some sort of demand that's coming in.
It depends. Well, the only time where you do need that is if that's what your ultimate goal is. You need to identify your target audience and create. So this is one of the things that Charles was well pissed off, because Wyoming, the state that he's from, and he set up IAG in, didn't get included in the Wyoming stablecoin tender.
Yeah, that's
right?
a bit peak, to be fair.
No, but the reason is, I mean, and this is where I've never spoken to the guy, obviously. Actually, that's not true. I have been on spaces with him, but I've never spoken to him about this subject. At the end of the day, Wyoming doesn't want to be told, give us 6 months and we'll build something for you. They want it off the shelf now, and they want to know that they're not the first one to do this with. So Wyoming are going, okay, well, you've got AVAX, you've got Ethereum, you've got Solana, you've got Polygon. They've all been running USDC and USDT native on chain, right, for the last few years or however long. So I know that they can do what we need it to do. Am I going to use that? Or am I going to accept a tender from somebody who says, well, we haven't got native USDC or USDT?
Because they're from Wyoming.
Yeah, just because they're from right, it's not going to happen.
No.
Now, the argument could be, well, we've had native stables on Cardano for a while. Yes, you have, but to the total tune of less than $30 million with zero high volume frequency.
Yeah.
Like you're doing, you haven't. I want to see now who's doing 500 transactions a second.
Yeah.
Because it's not just my stable coin that you're going to be doing, it's everything else.
Yeah.
Unless you've got your partner chain. And I feel like time and time again, we've missed the boat on things. It's kind of like we've reacted. We've waited until there was a demand and then tried to persuade people to let us build the need on Cardano. Or we've been behind schedule. Like when we finally got smart contracts, we went up to $3. That's when our last all-time high was.
Yeah, I remember it.
$3.10.
I remember when
everyone, even Ethereum, even bloody Alex Becker was like, "Oh my god, I've bought tons and tons and tons and tons of ADA."
Yeah.
Well, because smart contracts are coming in 2 weeks. And it's going to be awesome. And we get smart contracts.
Then what?
And then all you could do was name a lobster for about 3 months.
Yeah, that's what I mean.
And then when we did finally get DeFi, no one worked with.
Gone.
Yeah, but not only is the attention gone, there was still some lingering.
Yeah.
But we got the smart contracts, and the smart contract provider or the DeFi platform Sunday, and there was such demand, and our block sizes were still so small, and it snarled the network up for 5 days. Everything was still going through. It's just that the volume of transactions and the size of transactions was so big that no one could. You put a trade on, it'd take like days for it to go through.
Yeah.
So again, that was it. That was kind of like not the final nail in the coffin, because we're still here and we've moved on from it now and it's very different. But at the time, it could well have been, if it wasn't for the community, that could have been the end of the chain.
Yeah, the other way is like if you actually had stuff ready, you would have kept running. Can relate this to like a real world thing. It's like my dad's just bought a company, and one of the reasons that the company went into administration is because they're a meat producer, but they started to make bespoke packages of meat, or like bought the infrastructure, £3 million worth of infrastructure extra when they were already struggling, to try and like take the company in a different direction, which isn't wrong. But they had no forward orders for the product, so they spent £3 million on expansion for something they got no orders for, and then all of a sudden they got to the point of we can produce now. Employed another 400 people to run the equipment, and they got no one to buy the orders. Yeah. And it's like, well, hello, like it's not rocket science, is it? It's like, guys, if you want to sell a product, or in this case, an application, or whatever it might be, you need someone to bloody use it. Otherwise, what's the point in spending money and building the thing?
Yeah, exactly. Well, and that's kind of like where it's strange in this industry at the moment. Like, it's all that DeFi TVL. If you look at the amount of USDC locked up on certain chains, and it's like you look at their actual usage for it and the revenue generated, you go, you've put it in there, but it's a waste. You know what I mean? This is the problem with the whole thing at the moment. Like, I've got to make sure that what I deliver now is done properly and is perceived as being good value, because it will open the door for more people to come in and market, because they'll see that benefit. But I mean, you've got, for the longest time, we've just relied on free marketing, word of mouth.
Yeah, actually, just going back to one point that I just wanted to just came back into my head. You know, when you were talking about Wyoming and the stablecoin, I just want to quickly touch on that. You were saying like, why would Wyoming launch on Cardano when they could use like something like ETH, for example, because they've had all the USDT volume or whatever.
Yeah.
And that's always been my discussion with like Ripple and XRP. I'm taking it back to this, but it's always been my discussion there, is because if in the future, any time, like a bank goes, I want to like do some cross-border settlement with a crypto asset, who's been doing this for 10 years? It's like Ripple have got 400 NDAs with probably financial institutions where they've been at least testing, if not using Ripple payments with potentially XRP as a settlement layer. It's like, well, who are you gonna try and use? Because they're not going to just like, as much as we say, and I do think they will maybe make side chains and stuff like that on main chains. If you're going to use a product, you're not going to use any product that's not been tested, especially for like a financial product. Why would you take a risk on something that has never been done?
No, not if you're a bloody state of the USA
or a bank
with billions.
Yeah.
I mean, you're not. There's a risk and reward ratio here. Like, if you're a relatively small company, there's a huge potential upside as a reward for you to partner with somebody like Cardano and do something like that.
Definitely.
because the risk is relatively small.
Yeah. Are you gonna get your midnight tokens then if you get them?
No, I don't know. You kind of feel like it's a click of a button for me because I'm on Cardano already.
But you haven't got them yet.
No,
Like you haven't said you want them.
No, because I've got like 5 wallets in total, and the one that's got anything worth claiming on for midnight, I guess, is my ledger. But I need to sit down and update my ledger. But before I do that, I need to write down the keys. I've been in Greece and Italy and whatnot. I've not had time to
That's
do
the same for me. Is like I think that it's probably worth it to claim midnight, but like they want you to basically move your private keys to the only like interoperable software wallet on the XRP ledger called Zaman. And I don't want to do that. Like, the less interaction I can have with my ledger, the better. I want them to just be like, it's fine if they just ask me to sign it from where it is. I could just be like, yeah, cool, like, that is my proof. That's to prove where my funds were at the time. So what I'm going to have to do is get a new ledger, transfer all my XRP from that ledger onto the new ledger, and then upload the old wallet, which has had the snapshot, to the thing that's compatible. And I don't want to do that either. It's like, come on, lads, just fucking...
Do you know what some people do on Cardano?
What?
Because I've heard... I say this because I've seen them tweet it publicly. So obviously, the biggest wallets on Cardano now are single address wallets, right? But originally, it was all... Every time you interacted, you'd get a new wallet address. It was like a security, privacy thing. Say privacy, anonymity. So what a lot of people are doing with these single wallet addresses now is that obviously, although it's a single wallet address, you can actually generate a new wallet from the same seed phrase, right? So they're generating 5 or 6 wallets with 0 in them, and then the 7th or 8th wallet is the one at which they're putting their stuff in. So if somebody tries to hack their seed phrase, they'll go in there and they go, "Oh, there's nothing in it." Move on to the next seed phrase, or just sticks a little bit of dust, and then because obviously that way, like your seed phrase, then somebody's got to go.
It's almost hidden, yeah.
Yeah, it's always it's hidden. It's just like 7 or 8 generations deep.
Yeah.
So yeah, it's a pretty cool.
Yeah, it's quite
cool
good
idea actually, but it's a pain in the. It's not that much of a pain in the ass. Like if most of the software wallets, if you do that, it's just a few clicks to open up more wallets. Anyway,
right, Pav, hit us with let's summarise the episode. We've got 6 minutes left, Pav. Is there anything you want to add about what you think? What do you think is going to happen in crypto over the next 2 years?
In 2 years?
Yeah, well, maybe 3 years is the end of Trump administration. So let's go 1 year's midterm. So we'll say anywhere between 1 and 3 years. What's going to happen in the next 3 years in crypto?
What, price-wise or?
Whatever you want to let us know.
I think we're going to see more institutional adoption. We're going to see more like bullish regulatory framework come in. And I think it's just going to essentially lead to, in terms of price action, like a bull market that will go into next year. And then after that, I'm just not too sure. Like I don't see anything past that, if I'm honest.
Do you think GTA 6 will have any effect on crypto?
I think so. If they execute it right, like we don't really know what they've done. We don't know what the connection between GTA 6 and crypto is going to be. So it depends how deep that goes, really. If they do it right, and if they make it like a big part of it, and they make the onboarding process seamless, so that the user doesn't literally have to know that they're even using the blockchain, then yes. But if not, probably not, because what they've got going on right now works for them. Like they're making tons of money the way that they're doing it right now. So I don't really get the argument. I was once upon a time on the argument of GTA 6 might onboard X amount of people onto crypto, but like, why would they do that? Do you know what I mean?
Why would they introduce or integrate crypto? And like if they had like Coinbase Smart Wallet where it's like email address sign up or whatever, where it just creates your wallet as you sign in, they could say, do you want to play for real money? Essentially, they could literally say that as a disclaimer at the start. And if you say yeah, then the reason why they'd integrate that is because they could have their own GTA token, which they obviously own a ton of the supply of. You can earn some within game, or you can buy a GTA token to buy assets, as we discussed there, like that are immutable, like that other people can't take away from you, and that you can earn specifically in your journey, and then sell also for GTA tokens, which again pushes more volume through. Yeah, that's it then.
That's it. Well, Thanks, Will.
Thanks, Dave.
Thanks, Pav.
Thanks, Pav.
Thank you all for listening in. Hope you enjoyed it. And we're looking forward to the next one.
Peace up, A-Town down. Scripting like
Peace
you
up.
say.